Property taxation in Arizona represents one of the most significant ongoing financial obligations associated with real estate ownership. Understanding how property taxes are calculated, billed, and collected is essential for licensees, as these costs directly impact affordability, investment returns, and disclosure requirements in both residential and commercial transactions. In real estate practice, an agent's ability to explain Arizona's unique tax structure helps clients anticipate expenses, avoid delinquency, and evaluate the total cost of ownership accurately. Property taxes in Arizona are governed primarily by Title 42 of the Arizona Revised Statutes, specifically ARS, Paragraph 42, 151 through Paragraph 42, 18052, which outline the process for property valuation, assessment, and collection. The property tax system is ad valorem, meaning taxes are based on the value of the property rather than its size or use alone. The county assessor determines the assessed value annually, using market data and appraisal methods to estimate the property's full cash value. The county treasurer then calculates taxes by multiplying the assessed value by the applicable tax rate, which is determined by local jurisdictions such as school districts, cities, and special taxing authorities. In Arizona, property taxes are paid in arrears, meaning that the taxes due in any given year are based on the property's value as of January 1st of the preceding year. For example, taxes assessed for 2025 are based on the property's value as of January 2nd, 2024. This delayed payment schedule ensures that taxpayers receive bills after the state and local governments have finalized their budgets and tax rates for the fiscal year. Property taxes are divided into 2 equal installments each year. Under ARS, Paragraph 42, 18052, the first half of the annual property tax bill becomes due on October 1st of the tax year and becomes delinquent after November 1. The second half is due on March 1st of the following year and becomes delinquent after May 1st. If either payment is not received by the due date, the property owner accrues interest at a rate of 16% per annum, calculated monthly until paid. To remember this, think of OA no more money. October, November, March, May. For instance, consider a homeowner in Maricopa County with a 2025 property tax bill of $4,000. The first installment of $2,000 would be due on October 3rd, 2025, and delinquent after November 1st, 2025. The second installment of $2,000 would be due on March 3rd, 2026, and delinquent after May 3rd, 2026. If the owner fails to pay by those dates, penalties and interest begin accruing, and eventually, the property could be subject to a tax lien sale under ARS, Paragraph 42, 18101, where investors can purchase the lien and later foreclose if the taxes remain unpaid. ARS, Paragraph 42, 18105 states that no sale for an unpaid tax may be commenced at a date later than 5 years after delinquency unless 1. The sale is advertised within the 5-year period. 2. The failure to advertise within 5 years of the delinquency is due to a restraining order or injunction issued by a court of competent jurisdiction. Unlike mortgage payments, which often include escrowed property taxes paid monthly in advance through the lender, Arizona's property taxes themselves are billed in arrears. However, many homeowners choose to pay their taxes through escrow as part of their monthly mortgage payment. The lender then remits the property tax payments to the county treasurer when due. It is important for real estate professionals to communicate clearly to buyers that Arizona property taxes are not prepaid, but are instead a liability for the period that has already passed. This distinction affects closing prorations, where sellers typically owe property taxes from January 1st through the closing date, and the buyer assumes responsibility for the remainder of the tax year. Make sure the prorations for the seller and the buyer are correct. Special assessments, which may accompany property taxes, are additional levies imposed to fund specific public improvements benefiting certain properties, such as sewer lines, sidewalks, or street paving. These assessments are authorized under ARS, paragraph 48, 5117 et seq, and are distinct from general property taxes because they are tied to a particular benefit rather than general public services. For example, if a new drainage system is installed in a subdivision, affected homeowners may see a special assessment added to their tax bill until the cost of the project is fully recovered. Example, a developer constructs a new residential community in Pinal County that requires extending municipal water lines. The local government issues bonds to finance the project and repays those bonds through annual special assessments charged to each benefiting parcel. The assessment appears on the property tax bill as a separate item and may continue for 10 to 20 years, depending on the terms of the bond. Understanding the timing and purpose of both property taxes and special assessments allows agents to guide clients accurately through closing prorations, escrow calculations, and investment analysis. Failure to disclose ongoing special assessments could result in a complaint under ARS, paragraph 32, 2153, for misrepresentation or omission of a material fact. Review summary. Property taxes in Arizona are levied on an ad valorem basis, meaning they are calculated based on a property's assessed value. Taxes are paid in arrears, billed in 2 equal installments, October 1st and March 1st, and become delinquent after November 1st and May 1st, respectively. Failure to pay results in penalties, interest, and potentially a tax lien sale. Special assessments differ from property taxes in that they fund specific improvements directly benefiting certain properties. Licensees must understand these schedules, legal authorities, and disclosure obligations to accurately inform clients and ensure compliance with Arizona's real estate laws. Discussion prompts. Why are Arizona property taxes paid in arrears rather than in advance? Answer. Because they are assessed based on the previous year's value, ensuring accurate calculation after government budgets and rates are finalized. What are the due and delinquent dates for Arizona property taxes? Answer. The first half is due October 1st and delinquent after November 1st. The second half is due March 1st and delinquent after May 1. How do special assessments differ from standard property taxes? Answer. They are levied for specific improvements that benefit certain properties rather than for general government services. Closing remarks. A thorough understanding of property taxation and special assessments is vital for every Arizona real estate professional. Taxes influence everything from home affordability and cash flow to investment returns and closing statements. By mastering due dates, payment structures, and disclosure requirements, licensees can help clients avoid penalties, make informed decisions, and maintain compliance with state and county regulations. Real estate agents who communicate these nuances clearly demonstrate professionalism and protect both their clients' financial interests and their own reputation for competence.